Hello and welcome. I'm April Pope, a certified financial planner and your retirement plan advisor. In today's training, I'm going to walk you through what you need to know about managing your plan as an ERISA fiduciary. If you're unsure whether or not you are a fiduciary, you may just want to err on the side that you are just in case. But in general, anyone who has decision making responsibilities over the plan, such as the CEO or CFO or maybe the HR director, these can all be considered fiduciaries. And even though fiduciary training, strangely enough, is not required by the IRS, we feel it's very important for our plan sponsors to know what their responsibilities are, and that's why we've created this approved training video just for you. Also, we will provide you with PDF handout that has most of this information on it. So you really don't have to worry about taking down notes on the specific details. So let's go ahead and get started. All right, what do you really need to know about managing your plan? Well, first off, we're going to talk about who is considered a fiduciary. Then we're going to go into what are your fiduciary responsibilities, followed by the consequences of breaching your fiduciary responsibilities. And then we'll cover some of the required ERISA bond and other insurances that can help you with your fiduciary responsibility for managing the 401k or 403b. All right, so let's get started. First things first, who is a plan fiduciary? All right, so one of your responsibilities, if you are one, is to ensure that your 401k or 403b complies with the standards of the Employee Retirement Income Security Act of 1974, or as we like to call it, ERISA, and all of its amendments. So, ERISA is the federal law that governs certain aspects of most qualified retirement plans. So, when you're thinking about who is a fiduciary, well, let's look here. Who is a fiduciary? Number one, if any person is named in the actual plan document, they are going to be a fiduciary, or they could have been maybe appointed as a fiduciary. Number two, any person who exercises discretionary authority or control over the plan assets, the money in the plan, and or the management of the plan. And number three, anyone who provides investment advice for compensation with respect to the plan assets. So plan fiduciaries have responsibilities for administering the plan, the regular day-to-day administration of the plan, as well as the selection of the investment options. And every plan has to have at least one named fiduciary. So now that we know who the fiduciaries are, and maybe you need to check with your specific plan to see if you are one or not, let's discuss what those responsibilities are. But please note, before we do go on to that, there could also be other fiduciaries such as board members or staff members. So you really want to make sure you know who all the fiduciaries are on your plan so they know what their responsibilities are. So generally, ERISA has standards of conduct that apply to all fiduciary actions. And we're going to walk through each of these very briefly so you understand what they are. All right, first up, we have loyalty. All plan fiduciaries are to act solely in the interest of plan participants and their beneficiaries. And this duty really includes ensuring that plan expenses are reasonable and that the benefits are paid to the beneficiaries or the plan participant, whoever it should be at that time. Next, we have prudence. What this means is all fiduciaries are to act with the care, skill, and prudence and due diligence of a prudent person who has experience dealing with similar situations. So, really, what's important to note here is that fiduciaries aren't required to be experts in every area of the retirement plan that they're managing. I mean, that would just not be fair, right? That's maybe not your wheelhouse or what you're trained to do. You're actually able to hire outside advisors such as attorneys, accountants, administrators, investment advisors, investment managers to help assist you in your fiduciary responsibilities, but you can't fully offload that responsibility. And we'll talk about that. Next, let's look at diversification. So the fiduciaries must diversify the investments of the plan in order to provide participants, with the opportunity to affect potential returns and a degree of risk to mitigate the risk of investment losses. So you want to make sure there's a wide variety of investments. And if we look at following the official plan document, plan fiduciaries must administer the plan in accordance with that specific document. And that's an instrument governing the plan. And assuming the documents comply with ERISA, you want to make sure they do. And your third party administrator or your record keeper, whoever's helping you put those together, they'll make sure that they are compliant. But whatever the plan has set up in writing and whatever amendments are made, those have to be followed. So you always want to refer back to your plan document. Okay, we're going to talk about paying reasonable fees. So, fiduciaries are required to evaluate the reasonableness of fees and all the charges paid by the plan, taking into account the level of services received for those fees. So, please note, I did not say they have to have the least expensive, it just needs to be reasonable for what you're getting. And the general guideline here is that you want to have your plan benchmarked about every 3 years to keep this in your fiduciary file so you can say, hey, I've shopped out my plan, I know what I'm getting, and I've compared it with other industry averages and we're on target, just to show that you're keeping an eye on that. And that's just industry averages. You're paying reasonable expenses for all the services you are getting. So that's really what you want to make sure you are doing and taking care of. All right. So now, one way to limit some of this fiduciary responsibility is by using the ERISA Section 404C. So let's take a look at this. What 404C provides, it's limited relief from fiduciary responsibility for retirement plans in which the participants or your employees have independent control over their own plan investments. It allows the responsibility for investment losses to shift from the plan fiduciary to the participant. So, as long as you're following these requirements, you'll be fine. Here are the Section 404C requirements of ERISA. One, you need to make sure you're offering at least 3 diversified investment options. Next, you want to inform participants that your qualified plan intends to comply with these Section 404C requirements, and that comes through a disclosure that gets sent out. Three, you'll want to provide sufficient investment information to the plan participants so they can make informed decisions. You want to offer participants the opportunity to give investment instructions and receive written confirmation. So if they change something, you want to make sure it's written that they made that change and they have that confirmation. And that's usually provided by your record keeper. Um, you want to give plan participants the ability to change investment instructions at least quarterly, can be more often. And you want to communicate to plan participants when your plan adopts new provisions. Now, all of these disclosures and requirements, if you work with a third party administrator, or what they call a TPA, or maybe it's just your record keeper, and your record keeper is, whoever it is that is where your participants go to log in and see their account, they traditionally can help you with getting some of these disclosures out to the participants. But you, as a fiduciary, you're just responsible for making sure that it's happening. Okay, so talking about what your responsibility is, let's talk about personal liability. This may be the most important part of this training. Seriously. There is no corporate veil, if you will, when it comes to your fiduciary responsibility. So, what that means is you can't just say, oh, that was the organization's fault or the nonprofit's fault or the company's fault. Not mine. Not if you're a fiduciary. Anyone who is a legal fiduciary on the plan, now this is in the worst case scenario, you could get sued and your personal assets would be at risk to be used to make good on any losses resulting from the breach of your fiduciary responsibilities. Now, you may think this doesn't happen, but there are court cases out there to support this. So please make sure if you're a fiduciary, one, you have fiduciary liability insurance, and that's different than D&O. It's specific insurance, so you can check with your insurance provider to make sure you have that. Because restoring profits, if there's evidence of improperly using plan assets, and an example where we've seen this in some court cases, owner of a company uses 401k plan assets to keep a company afloat because it was going down and just said, let me just borrow some of these plan assets and get the company back in order. Yeah, no, that is completely illegal. So the plan would be responsible for restoring any of those profits that may have been made during that time. So really, this is something you want to take note of. You want to make sure you know what your responsibilities are and have insurance to help you if there are multiple fiduciaries on your plan. All of you need it. So finally, you could be subject to other taxes and penalties that the court may impose if you breach your fiduciary responsibility. Now, I'm not saying all this to scare you. I just want you to understand the seriousness of being a plan fiduciary and ask any questions you may have about your role. So just know that's what it is. Not here to terrify you, just want to inform you. All right, so let's talk about 5 steps to deliver on your responsibilities. Number 1, Document your decisions. So, document, document, document. Ideally, you set up a due diligence or a fiduciary file when you establish your company's retirement plan. If you didn't, it's okay. The next best time is now to get one started. And in this file, you want to document any decisions you make about your plan. And this is going to serve as evidence that you've satisfied your fiduciary requirement of documenting your decisions. So, you want to keep this information for a minimum of 6 years. All right, number two, an investment policy statement. This is the foundation for the plan's investment decisions. It establishes objectives for managing the plan's investments, including the criteria for your investments you're selecting and evaluating and monitoring. And using an IPS enables you to have a more disciplined and systematic approach in your decision making. So, there are ways, again, that you can outsource a little bit of this and have someone make those investment decisions for you. And so while an IPS is not explicitly required under ERISA, the DOL has issued guidance stating that having an IPS is consistent with carrying out your responsibilities as a fiduciary in compliance with the legal guidelines. And it also can help shield fiduciaries from complaints or potential legal actions. So you want to create a clear, comprehensive record that demonstrates your prudent planning and procedures. Also, you want to establish a framework for determining the selection, monitoring, and termination of plan investments. So again, if you've hired someone and then to take on that fiduciary responsibility, then they will have an IPS and we can walk you through that. So just understand if you have an IPS, you have to follow it. If you don't have one, you don't have to follow it, but it's not required to have it. So my main point here is if you do have one, you have to follow it. All right. So step number three, let's look here. And that's to choose investment options that are consistent with the objectives set forth within the IPS. So Section 404C, like we talked about before, explains participant-directed plans such as 401ks or 403bs should offer a broad range of investment alternatives. So basically, a plan's investment options should be diverse enough to cover, you know, a diverse population of participants to give them the opportunity to choose, like we said, from three diversified investment alternatives, diversify investments in order to minimize risks. And in general, you want to make sure they have a description of the investment objectives, risks, and returns of each fund that's listed on your fund menu. They also should have instructions on who to contact to give investment instructions to, and specific limitations on transferring investment amounts. So if they're making decisions and changing things, you want to make sure you provide them with how to do that. And of course, performance and fees are very important, but it's really important to understand that ERISA's fiduciary responsibility standards may not be satisfied just by choosing investments based on above average or short term investment results. So you really want to look at the whole picture when you're choosing appropriate funds for your plan. All right, number four. Fiduciaries typically choose to either handle this responsibility themselves, monitoring those investments, or hire an independent investment advisor to prepare the reports and assist them in the reviews. If you're not sure about what you have on your plan, reach out and let me know and we can talk about it. Number five, a plan fiduciary needs to make sure they communicate to the participants. That means you're sending them a summary plan description. You are sending a written notice that your plan is going to qualify as a Section 404C through ERISA. You want to make sure they have a statement of material modifications and a summary annual report. And if all of this sounds like, I don't know where to get that, I don't even know what you're talking about, what are these things? Oh my goodness, I don't even want to run the plan anymore. Don't worry about it. These are probably already going out on your behalf if you have a third party administrator that this is part of their annual mailing to make sure that these get out to participants, or even if it's with your record keeper. It's just your responsibility to make sure that they're happening. And traditionally, this is what your advisor is helping when they're doing your fiduciary checklist, making sure you have your fiduciary calendar for the year. That's what we as advisors help to do to make sure all of this is getting done and make sure you know what your responsibilities are. You also, as I mentioned, need to make sure they have general descriptions of investment objectives, and they want to have instructions on who to contact to make any of those changes. All right. Hopefully, you're still hanging in there with me. So, managing your administrative responsibilities, just as you're responsible for the oversight of the investment decisions on your plan, you're also responsible for monitoring the administrative aspect of your plan. So, your TPA or your third party administrator helps by overseeing your plan documents and compliance and administrative services. So, fiduciaries selecting 401k plan or 403b plan services should also consider the type and quality of services offered compared to what the plan really needs. So, when you're reviewing your plan, like we said, every few years, you want to look at the number of available investments. You want to see if they offer loan services. Is there a live client service representative to help the participants? Do they have telephone voice response, internet service capabilities? You want to look at everything, not just fees and expenses. You want to kind of see everything that you have um, with your record keeper or your TPA helping you manage your administrative responsibilities. And so once your plan is established, on an ongoing basis, ERISA imposes a number of reporting and disclosure requirements that you have to have. So here's a few things that you want to make sure you get out there with the help of your team, whether that's your TPA or record keeper and advisor. So you want to make sure if your assets are at the required amount, you have to file an annual 5500 form with the government each year. You also want to obtain a ERISA fidelity bond of at least 10% of plan assets for individuals who handle the fund. So this is not what we talked about. This is not liability, is not errors and omission. This is separate from that. So you want to make sure you understand what your different insurances are covered, and this is a required bond of 10% of the assets. Also, you want to arrange an independent CPA or an audit firm to audit the plan annually if you have more than 100 employees at the beginning of the year. And then this last one, very important, you want to make sure you submit deferrals on a timely basis. Generally, this means employees' money, it's got to be deposited, as soon as feasibly possible, but no more than 15 business days, the month following when that participant said they wanted the money held from their check. So this is a common fiduciary oversight that we really want to help you avoid. But the idea here is money is coming out of a participant's check. If it's just sitting there, they thought it was invested and it doesn't actually make it into their investment account, into their 401k, those are lost earnings that they could have had. So you really want to make sure you get those funds that the participant is taking out of their check into the plan as soon as feasibly possible. All right, take a deep breath. That was a lot of information that we covered today. And although this isn't everything you need to know about being a plan fiduciary, we hope we've highlighted some of the major points and helped you become more clear on what your responsibilities are. So this is not something you want to take lightly. As I mentioned earlier, there's lawsuits every year involving the violation of plan sponsor fiduciary responsibilities. So if you have questions, don't hesitate to reach out. Reach out to myself, your CPA, your auditor, your TPA, whoever it is. We will help you get the best information that you need to help you run your plan in a compliant fashion. So thank you again for your time today. Don't forget, you want to make sure you email me at the email here on the screen and just say, hey, I finished the training, and I'll send you a completion certificate for finishing the training today. Thank you for your time. Enjoy the rest of your day and reach out if you have any questions. Again, I'm April Pope, Certified Financial Planner and your retirement plan advisor. Have a great day.